Hello, welcome to the Market Carver. I'm Adam Harter, Chief Investment Officer, along with Joseph Clark, Managing Partner. Thank you, Joe, for coming along here. Although I would say the only bad thing I could say is that I think you've done about 10,000 of these. So every time you come on, it makes it one more difficult to eventually catch you. But thank you for coming on here. And I know everybody will be happy to see you for a few minutes here.
Happy to be here and looking forward to it. Obviously, a lot going on inside of the market, so I'll let you do your thing. I will just remind you guys, if you have not been at one of the Thirdlies, obviously we'll finish those up this week. Make sure you watch the virtual, and we're happy to get you that link. Adam does a great job sharing information. Aaron's got some great stuff on some of the IRA rules and changes that are out there and transpiring. And I give my opinion on the more than 30 questions that you guys actually submitted. So it'll be worth your time and energy. I promise for you to take it and watch it. So Adam, go ahead and do your thing, buddy.
All righty, we'll do. We got three topics to break down. Housing, I know we've hit it a couple times, and what looks to be an inevitable slowdown there, and we got a graphic to share with you there. Joe will talk to us about investing in the midterms. It's been a question on many of your minds, and we're certainly going to have that coming into focus over the next month. So I think he's got some great information to share with you. And then I'll clean up with some technical information that Andrew shared with us yesterday, and I'll do my best to explain to you all. So we'll start with housing. I think this one chart really very simply explains the challenges that we have in the housing market. I know I shared a couple weeks ago that there is a slew of housing-related stocks that we'd love to be able to invest in. They are on deck. We are waiting to put them in the game, but it may just be a while, and this is really why. And the chart's showing you here how much $2,500 will go towards buying a house, assuming that you have a 30-year mortgage payment and put 20% down. Just a little over a year ago, that ratcheted all the way up to $758,000. All right, it went for a lot of house, but look how quickly things change. It is now $476,000. So you have to go a long way. That is a long stretch to make up. So in our minds, there's just a lot of adjustment that needs to take place because there's not much you can do to fix this math. The interest rates have certainly changed that picture dramatically. And again, longer term, I think there's a lot of optimism. There's reasons we want to be looking at housing. There's a lot of houses that need to be built, but we have to accommodate for that short term. So after housing there, Joe, I'd love this chart here on the midterms that you shared and let you kind of give us some context.
Absolutely. One of the things to keep in mind in the housing, just anecdotally, remember anytime there is a purchase or a sale, most of the buyers and most of the sellers have done it very few times, which is why we bring in realtors. When you see a larger marketplace, for instance, Open Door in my neighborhood bought a house, and when you see them taking a massive decrease in what they're willing to sell a house for from 6 months, you know that it's not just individuals, but it is also professionals. I just thought I would throw that out. One of the interesting things and the questions that we got probably 5 or 6 times that were submitted for the Thirdlies was this discussion over the political realm and what happens. So the first thing that I want to remind you is in order to get politics right, you have to hit three things accurately. You have to know who will win, you have to know what they will accomplish if they win, and you'll have to know how the market acts. And one thing I want you to take away from that is when I look at the major tax cut change in 2003 that changed dividends to preferred, when I look at what happened with the Obama election and what transpired in healthcare, and when I look at the Trump election, in all 3 cases, people either dramatically failed to understand who would win, what they would get accomplished, or how it would impact the markets. So our answer from a very disciplined response to how we manage money will never be to pay attention to what happened in the elections. We're going to continue to react with our very responsive, discipline in terms of how money is invested. However, people ask for history, and so I like to show it. And the chart's going to show you there are two distinctive periods of time. The first chart is what happens to markets typically before the midterm. So as people try to ponder and pontificate what's going to occur, the 3 months before, the 6 months before, well, we're already there. So let's look at the 12 months and after in terms of what transpires in a marketplace. During a midterm, that average from November 1st to October 31st is about a 19.1% return. Non-midterm, the average is about 8.9. You live in a period of volatility. And if you've watched the market, Carver, for an extended period of time, you'll know Adam has constantly addressed the lack of volatility until here recently inside of the equity market. It's been either straight up or straight down. The last 3 weeks, you have to pull that out. It has been very volatile. But fixed income has really lived in a volatile kind of world most of this year with the interest rates changing. The Federal Reserve is a big player. I don't believe in trying to watch the nightly news and what's keeping up with everybody's conversations. I want to focus on the facts to the best of my ability. But I will remind you that if you're going to pay attention to politics or pay attention to the Federal Reserve, if I had to do one, I would pick the Federal Reserve. I think they're far more influential. And clearly what Adam is seeing inside of the housing market came from that. Now, Adam, I know everybody's looking forward to hearing about the lower lows or the lower highs or whatever that technical chart that Andrew would normally provide. Looking forward to some good news.
Yeah, and it absolutely is good news. And so, as we've said all year long, we'll give you the information. If it's bad, it's bad. If it's good, it's good. And rarely do we ever get to a point and we find ourselves in the middle of a positive environment. We don't just wake up and find on the front page of the news that everything is better. What happens is a series of events. And very commonly, this is one of the first things that you see when there's a positive turn in the market. It is oftentimes gives you a false sense of hope, but it is nevertheless oftentimes a turning point. So what we're really talking about here is you've got the S&P 500. Underneath that S&P 500 are 500 stocks. And so of those 500 stocks at any given day, some of them are going to be somewhere in the middle of their 52-week range. Some may be at their high, although that's going to be few and far between at this point in time. Or we'll have those making fresh new lows. And so what we've seen is the S&P 500 moved and eventually made lows that it did in June, and then again here testing again in September. As that S&P 500 made those lows, we see a whole lot of stocks making new lows. However, what we've seen over the past week is a decline in the number of stocks making new lows. That is a very good sign. Once again, it doesn't mean that it will continue, but it is the first building block from a technical standpoint that even though the overall index made it, it shows you that a lot of stocks had exhaustion from the selling pressure. So they made their new lows, and it was just very difficult to sustain that. And so they began to reverse and show some positive divergences and begin to rally. Now, hopefully that will continue, and we'll see those signs continue to build, because this is just the first building block, but we will certainly be keeping you up to date on each of those as we have them. So thank you for staying with us for a few minutes this week. And thank you, Joe, for coming on and visiting with us. And again, for all of you that came to the Third Leagues, we really appreciate it. And if not, hope to see you on the digital side. So last reminder, if we haven't seen you for a while, you're not coming for your update, please give us a call, 800-928-4001. If we haven't had the pleasure of meeting you yet, we'd love to see you. I know it's a lot of people looking for a second opinion these days. We're happy to give you that in a complimentary fashion. So scan that QR code or give us a call, and have a great weekend.